Today, the Acosta stablecoin regains its value after hackers minted billions of tokens. Bitco threatens to sue Galaxy Digital over its cancelled merger, and hackers target DeFi protocols. Welcome to Magnum.Xtrading. I'm Bryan. Digital assets falling again this morning by noon Eastern. Bitcoin dropped to 23, Ether traded around $1,800, Cardano dipped at 56 cents. Most major cryptos were on the defensive for a second consecutive day, with Bitcoin and Ether both trading slightly lower from respective 2+ month highs they reached less than 48 hours ago. Stronghold Digital Mining said it was negotiating with its lenders over a possible debt restructuring or refinancing agreement that would keep the miner afloat. Holdnot is the latest in a long line of crypto companies that have been stung by the recent market downturn. Singapore-based exchange Sipmex received creditor protection on Monday, while trading firm Three Arrows Capital owes billions of dollars to creditors after imploding in June due to leverage. Alright, let's talk about today's top stories. First, the Acosta stablecoin is almost back on track after hackers torpedoed its value over the weekend. The token has nearly regained its $1 peg after plummeting to as low as 9/10 of a penny. On Monday, the recovery is thanks to the protocol destroying the 1.3 billion tokens which were minted by hackers over the weekend. The token sat around 91 cents by noon Eastern, and Acosta said it was working to track down all transactions performed by the wallets linked to the hack. Next, Bitco wants $100 million from Galaxy Digital over its cancelled acquisition. In a blog post, the crypto startup responded to Galaxy ditching the billion-dollar deal, calling it, quote, improper. Bitco said the merger was not set to expire until December 31st of this year, and that Galaxy needs to either pay $100 million or face court damages of that and much more for acting in bad faith. Finally, a report shows hackers target DeFi protocols. It's not just investors, crypto criminals are having a tougher time making money in this year's bear market, according to a new report from Chain Analysis. The total volume for illicit crypto entities is down 15 from a year ago. That comes as overall crypto volumes have fallen more than 30%. First, the blockchain data firm found a significant drop in scams. It was 65 below the levels through July of last year, and these are typically those get rich quick schemes or fake investing opportunities promising enormous returns. Those tend to seem a little less believable with prices down and fewer people are falling for it. Then there's dark web revenue that was down 43 from a year ago. It was actually tracking higher for this year until April, that when Hydro Marketplace, a prominent hub, drug sales, stolen data, and money laundering services was shut down. The one area of crime still booming, hacks and stolen funds, it topped $1.9 billion so far this year. That's up 58 from a year ago. This is mostly in decentralized finance, and that open source code can make it uniquely vulnerable to hacks. It on one hand is used to by developers but is being increasingly exploited by hackers. We've talked about some of those Solana wallets recently getting hacked, and then the Ronin hack was by far the biggest this year. Half of that total has come from North Korean groups, which have taken home about $1 billion in stolen funds. Illicit activity is still less than 1% of crypto's total activity, but these hacks have been weighed on investors' confidence, and it's been seen as a drag on an industry is really looking to become more legitimate in the eyes of investors. That's all for today. See you.